So Plug, my pick, Plug Power, ticker PLUG, the stock in the hydrogen and fuel cell maker under pressure today. As you can see, they're down about 5.5%. Now that's after warning full year 2022 revenue would be 5 to 10% lower than the expected 900 million to 925 million that they laid out in their August call with investors. So that's now dropping to between 821 and 867 million. Now this is because of timing and broader supply chain problems. And this also means that completion of some of its larger projects is also being delayed from 2022 to 2023. Now, the company did say demand for the fuel cell applications and electrolyzer business does remain robust. They also expect an accelerated path to profitability and positive cash flows. The stock has had some wild swings, though, year to date. It's down more than 30%. But big banks are still bullish on the long-term future of hydrogen. We saw Goldman Sachs predicting that hydrogen generation will eventually become a $1 trillion per year market. Citigroup also bullish on hydrogen fuel cells, and that's despite some of these false starts for the industry. But they see more impetus from policymakers, especially, Shauna, as we consider the energy crisis in Europe, really putting some of these alternatives into the forefront.
Yeah, Rochelle, I think we can sum up what's happening with this stock today, similar to what we've seen from other companies who have guided lower, didn't meet Wall Street expectations. There simply is not any room for that in terms of the market today. And we're seeing that reflected in the stock price today, with shares off just around 5.5%. Ahead of today's drop, the stock had actually been doing relatively okay for the past 3 months. It was up 8% over the past 3 months through yesterday's closing price. That, of course, better than the S&P's a 3% slip during that same time. So obviously a huge headwind here for Plug Power, at least in the immediate term, as the company does work out some of those supply issues that you were just talking about.